So in this video, I'm going to break down this exact trade idea, which how I was able to not only make $8,000 in 30 minutes, but catch the exact low of the week. As we can see, we entered our position down here, scaled in at this bullish engulfing candlestick, and we were able to sell our position back up here for over 225 points on the Dow Jones, which ends up being the exact low of the week. If I was able to hold my position, this would have been generational wealth. But in this video, I'm going to break down not only how I was able to catch this trade, why did I get in where I got in, how I was able to scale in, and where I got out to where I got out, and give you guys the blueprint in the context that you guys need so you guys can do the same and become profitable when it comes to trading ICT concepts. The first thing we want to be going over is our Spark Trading Journal, and we want to be going over our Trading Journal section, which we have the exact trade right here for about $9,000. We did take a loss before this for about $1,000, making us a little over $8,000 on the day. And we can open this tab here and we can see the exact trade right here, which we had that break even trade before then, got in a little early, but we were able to establish the exact low, scaled into our position, and we got out for about a 5-to-1 R. Before we ever come into markets and frame a setup, we have to create a pre-market plan, which we can go into our pre-market routine section, which we can come here on Wednesday. And for the news, we did have CPI. And essentially our draw on liquidity was we were looking at price to find rejection at these resistance levels above us. So obviously this order block level right here, the first area of targeting is the prior day lows and eventually down into the NFP lows, which was down here. Well, as we did have the SMT with S&P 500 and NASDAQ. So essentially the Dow Jones was pushing lower prices while the dollar was pushing higher prices. So my main emphasis coming to marketplace was anticipating lower prices. If my original hypothesis was lower prices, then how I was able to catch the exact low of the day. And we're going to go into the charts and we're going to do a top-down analysis approach. We're going to go from the highest time frame to the lowest time frame. I'm going to explain to you how I was able to call the markets, as well as how I was able to anticipate the low, get my entry, get my scale in, as well as how I was able to get out where I got out, making me a little over $8,000. And hopefully this video, if you watch till the end, will give you enough context to where you guys can go into the markets and do this yourself. If you guys want to support me further and learn from me live, make sure you guys click that first link description and join my private mentorship. Inside of my private mentorship, you get access to live trading with me every morning, in-depth trade breakdowns, and an entire catalog of additional content and education on how to trade the MXM effectively and all of the trade models that I use to find success inside the markets. This is information found nowhere else on YouTube that has helped thousands of my students find consistency and help pass their first fund accounts and get their first payouts and much, much more. If that's something that you guys are interested in, that's going to be a first link description, and back to the video. So we're coming down here on the daily time frame, and some key things I want to take note of is obviously this NFP low. So we have this area of liquidity below us, which I was anticipating the marketplace to come down into to reach, as well as below that we do have a support level in the form of this daily bullish fair value gap. And just above this daily bullish fair value gap, we do have this volume imbalance, which is essentially an inefficiency inside the marketplace, which is kind of like a magnet to where the market usually comes back into it to fill in before continuing to go higher. You reach down into these levels to potentially find support to then continue back higher prices. Coming down to a 4-hour time frame, we can identify this rejection block by this long wick level. We came back up into that long wick level, found rejection to push lower, came back into this rejection block by this highest wick to this highest body. That separation is our rejection block. Came back up into it, found rejection once again, came back into this last up close candle as an order block, found rejection again. And as we can see right here, we are back inside of an order block level. So I'm anticipating when news comes out, which is CPI, we can find rejection at this order block level to potentially seek lower prices, reaching back into this lower level, this NFP low, and then down into these levels of support, preferably this daily fair value gap plus that volume and bounce, right? This is exactly what I was looking at in my pre-market planning, because when you create that pre-market routine, when you come into a market, you don't come in blind. You already know what you're anticipating. Trading becomes a lot easier because you're following your specific buys and you're creating that plan so you're not getting confused on the lower time frames, because you already established that point of interest and draw on liquidity from those higher time frames. Now we're going to go down to a 1 hour time frame and get more additional context. Now that we're down on the 1 hour time frame, we can identify this 1 hour bearish fair value gap as a level of resistance inside the marketplace. So we can establish this high right here as a strong high. Price already created this high level followed by this drop to downside. So the chances of price reaching back up into this high is very slight to none. So we have that rejection right here from that high point. Then we came back into this bearish fair value gap level. So obviously this is another high point that is to be respected by a strong high. And as we can see, price coming back into this level of inefficiency. So since this is a strong high, we have no interest in price just coming higher to take out this high. Most likely price is going to find resistance here to then continue lower. And the only way that price would come back higher to take out this high is if we come lower to establish liquidity and take liquidity to then continue to push the marketplace back higher. So this is essentially how the marketplace and market structure works. For us to come back higher and take out a previous high, we have to come lower, take out liquidity for then a change in state of delivery, breaking back previous highs to then continue higher. If the downtrend is currently lower prices, we have no interest in price coming back higher to take out previous highs because we have yet to establish that low at a specific point of interest. And our specific point of interest refers to the higher time frames. And we have this daily bullish fair value gap here as that higher time frame point of interest at inefficiency to where the marketplace wants to come back down into. As long as we have a draw on liquidity or somewhere inside the marketplace that the market wants to come down into, the market will continue to see lower and lower and lower prices until that level is then met. And it's not until that level is then met to where we could then start seeing higher and higher prices. This is why it's important to frame your narrative from the higher time frames. And when you come down to the lower time frames, we already know what we're looking for. The CPI is about to come out in about 30 minutes. I'm going to go down to a 15 minutes time frame. I'm going to see how CPI plays out. And from then, we're going to look for our trade ideas. We see that drop to the downside, leaving this last up close candle as our bearish order block. I want to see price come back into this bearish order block level to maybe continue lower prices, reaching back below this previous low, then reaching back below that NFP low, and hopefully reaching down into at that daily bullish fair value gap to then maybe we could potentially see a bounce for an overall reversal to the upside. We can see price coming into that order block level. Then we see that drop to the downside here. So unfortunately, I was away from my desk at the time at around 9:30, so I wasn't able to establish a short position here, but it's totally okay, right? If you guys do miss an entry, it's important not to chase the market. Instead, you wait for the marketplace to give you another opportunity. Since I did miss my short entry here, instead I waited for price to come lower into this level, so then I can establish that bounce, reaching back higher prices into these inefficiencies. Don't look to try and chase the marketplace or try to make that setup back or make your money back, right? Always look for another opportunity, because I promise you another opportunity will always come to fruition, and you never know, that other opportunity may actually pan out more than the original opportunity that you thought that you missed. So let's continue to see the marketplace reaching lower here. As we can see, we came lower into that daily bullish fair value gap level. When it comes to higher time frame fair value gaps, one thing that I like to do is establish them into quadrants. So we have the opening price here of that fair value gap, the 25%, the 50%, the 75%, and eventually down here at the low of that fair value gap. So at this specific point, I did take my longs here at this 25% of this bullish fair value gap. And I made sure to put my stop loss just back below the 75% here of this bullish fair value gap, reaching back up into these levels of inefficiencies. So as we can see here, we have this bearish fair value gap as a level of inefficiency inside the marketplace, which, as we know, the market is a series of expansions and corrections. So since we had that expansion to the downside, this would then be a perfect area for the market to establish some type of low to then see a correction move, to potentially see that correction to come back higher and continue lower, or we could see that correction and then potentially reverse this whole thing in general. So essentially, this was a total swoop setup. After taking out this previous low plus tapping into this daily fair value gap level, I was more than confident to take my longs down inside this position. I'm going to go down to the 5 minutes time frame because when I usually do take my entries, I use less risk, and on the lower time frames, I tend to scale in. So I'm gonna go down to 5 minutes time frame and see if I can get any scaling opportunities. So on the lower time frames here, on the 5 minutes, usually something I want to look for is a change in stable delivery, essentially some type of bullish engulfing candlestick or some type of strong candlestick to signal to us that price has found support at this level to then establish some type of low. We come lower once again near that 50% of that daily fair value gap, and then we create this bullish engulfing candlestick, which this is the exact candlestick that I did take my long entry here, and I had my entry just right here. And when I usually scale into my position, I like to manage my trade, so I move my stop loss back to this previous low, as well as my original trade back below that previous low. I do put my take profit back above this previous high here, making me a little over a 5-to-1 R or over $8,000 on this trade idea. And as we can see, price comes back lower once again down into this long wick level. But when you guys aren't in a trade, you guys want to always remain confident and never allow price coming back at drawdown to affect you. So throughout this whole trade, as you can see in the live video, we were confident in trade. We knew price was going to pan out how it's going to pan out. We knew price was going to establish a low at this lower level. So we just remained confident in ourselves and didn't get faked out. And as we can see here, price does continue to see higher and higher prices, just like so, reaching back up into that inefficient level for over 225 points on the Dow Jones, which this is actually the most amount of points that I've ever made on the Dow Jones. So a very, very clean setup. And this did ended up being the exact low of the entire week, and price just continued to see higher and higher prices throughout the entire week. But I made a little over $8,000 on this trade. I'm not going to get greedy and try to hold this trade for a swing trade. I'm going to get out where I'm going to get out. I'm simply going to show up tomorrow and do the same thing. But hopefully you guys were able to learn something from this video and get value out of it. So that's going to be it. I hope this video was very insightful. Make sure you guys hit that like, subscribe, and comment what you guys want to see next. And if you guys want to join Spark Trading University, that's me and my brother Spec Trade's private mentorship. That's going to be a first link in the description. I'm Arkham. Be safe.